So, first of all, I'll give you a little background about Capria. We're primarily financial investors. The definition of an impact investor from a venture fund standpoint is quite different, but we do care a lot about impact in all the investments we make. We're a global fund that invests across the emerging markets. It's early stage, and the focus is largely AI. But within AI, healthcare is a key area of focus. And prior to this, I was with 2070 Health, which was a healthcare venture studio where we used to build healthcare services business, more single specialty, omni-channel kind of businesses. And I really love the way you define access and affordability as two key levers. The way we see the market opportunity in terms of both, impact for healthcare outcomes as well as profitability is in three different dimensions. One is of course affordability and access, but the third is awareness. And currently, the way market is structured, I think the highest impact both healthcare outcome wise as well as financially is in the awareness bucket. What I mean by that is if you look at all the prevalence numbers for any chronic disease or otherwise, you'll see a large number. That itself is underreported because not many people don't get tested. And even for the prevalence numbers, then if you build a funnel on how many people actually take doctor treatment and then take treatment, etc., that's so dropping, right? So you hear a founder pitch building a particular vertical, they talk about this large prevalence numbers and what that means for a market size, etc., but it doesn't translate into that kind of a market size. And in that bucket, I mean, my dad has access and affordability, but it's really hard to get him to consult a doctor. There's huge friction, both from understanding what happens inside my body and actually going and getting tested. That's across the spectrum, right? Even a driver, I've met a driver who spent half of his income in real money gaming, but wouldn't take a doctor consult because it doesn't seem as caring. And we're seeing a lot of interesting plays coming there, especially with AI. To Vishal's point, there was AI coaches or AI chatbots are coming up that really eases the friction. It gets to know you, chats with you, understands your routines, your healthcare outcomes, and slowly gets to share more and eventually gets you the awareness of where your health is and how you could shape that. So that's number one. The number two is the right wave of things is the devices or what you call fitness trackers. Again, helping you get to know the friction is lowering in that sense. So you can catch some of those issues much earlier. And that really helps you both as a country from a healthcare outcome standpoint and second, in terms of financial standpoint. On the second bucket in access, again, if you look at, we see again a lot of numbers in the picture saying the doctor to patient ratio is very skewed. The radiology machines to the patient ratio is very skewed in India. But if you go to a radiology center in Bangalore and see how they're operating, they would be at 60-70% capacity. They still have 30-40% of unutilized capacity, right? So the challenge thereof has been everyone concentrated in Tier 1 cities and not expanding to Tier 2 and Tier 3. And we see a lot of very interesting startups and come and solve that. We have an investment called 5C Network that started off with 30 radiologies, kind of uses unused capacity here and helps Tier 2, Tier 3 and other folks there. And the third bucket of affordability, seeing very interesting plays there. Number one, again, AI chatbots and all is making primary healthcare a lot more affordable. You don't have to consult or pay upfront fees there. That makes the friction again a little easier. The second is healthcare providers becoming insurers. So we have a largest healthcare provider now transitioning and becoming a insurer plus healthcare provider. We have a lot of healthcare services startup thinking from day one saying we're also becoming a insurer providers, and it becomes the incentives are aligned on day one. So I'll talk about how we look at healthcare investments and now think about making a 10 crore check, making a change. So broadly, in healthcare investing, you look at two kind of businesses. One is mostly healthcare. Second is mostly tech. So, for example, the business that Vishal talked about, which is an offline chain of clinics, is primarily a healthcare business, which might have some tech in here or there. Whereas an enterprise SaaS or a consumer tech company is primarily a tech company, which is building in healthcare. And the way we look at both of those businesses is very different. So for a healthcare services company, it's more about stable cash flows. It'll take a sweet amount of time to grow. It'll slowly grow. But once it grows, the beauty of that business is that it gives you very, very predictable cash flows at some point in time. And usually we have seen in any specialty that we look at, there's some number of patients that you need to serve in order to get there. So for example, if it's IVF, it's around 100 babies. You do 100 babies and everything kicks off from there, right? And initial days, it's really tough to get the patients to come to you, the doctors that you can hire, and so on and so forth. So there, when we're evaluating a business in say, a healthcare services segment, what we're really looking for is how is this guy, first of all, delivering outcome for one or two patients that he currently has. Do they have enough and more clinical outcome, which is 10x than what they can get anywhere else? And second is how is he or she going to get to that magic number? How they're going to scale? So usually what we have seen is in single specialty services, it's mostly a key man, somebody who has built some reputation in particular sector, coming with their doctor funnel, then attracting other doctors and usually getting there. And the way they compete with some of those Manipals is, Manipals and others are really good at getting surgeries or tertiary care. That's where they really provide a value of care. But if you're building something niche in a particular specialty, so to say, building secondary care or something on those line, you could do really well on that specialty, right? So when you look at a 10 crore check, we're looking at either can they grow to n number of clinics, how will that pan out, and how will that investment work in that line of things. But if it's a technology investment and say it's an enterprise SaaS, we're looking at how they're pricing it. Are they really, capturing? If they are talking about productivity, as Nitya said, is the pricing on productivity or on usage, and are people paying and seeing their outcomes for that? Or have they sold to these consumers? Do they have a sales muscle? They're selling to the US hospitals. How does that work, right? Or if it's a consumer product, it's again super different. Are consumers seeing the value? Are they retaining users month on month? As has the founder known the consumer so deeply? So it's really different on, I'll say, three of these categories. One is consumer-facing healthcare services, enterprise SaaS, and consumer tech products. But this is how we look at and evaluate those companies on the time. Not really. So consumer tech, so to say, will be more tech and healthcare is what I said. But healthcare services is primarily healthcare. So you would ideally, the founders you would see in that segment are mostly doctors or clinicians who have been there in that specialty, scale that specialty, has a reputation, has a doctor base, or like patient base so to build. But consumer products is just like a 24-year-old or somebody who is really good with tech, understands the consumer, understands distribution, building there.